button whenever you're ready so we can stop the recording at least. G'day, I'm Dr. Friday and I'm your host of In Your Prime. And today we're going to talk about a subject I keep trying to get through your guys' heads. We're going to take on the Bush tax cuts. I know this is a big subject and it's not an easy one for most people to understand, but you've got to understand it's going to affect every single person, especially you and me. So if we know exactly what's coming at us, it's going to be a lot easier for us to take on these subjects when it comes to you and me and our personal taxes. Okay, let's talk about high capital gains. I mean, high capital gains is really going to be major capital gains because right now, people in the 10 to 15% tax bracket, how much do you think they pay? Zero. That's right, zero. And people in the higher tax brackets are paying about 15%. Well, guess what? Nowadays, coming 2011, those people are going to be paying 15% tax, the people paying zero, so that's a 15% increase, and the other one's really not such a big increase. They're going to go from 15 to 20. Heck, that's a lot easier than the lower income bracket, right? From 0 to 15, that's a lot of money out of our pockets. All right, here's another one I personally think is going to affect the everyday person. Dividend tax increase. Dividend tax increase, right now, those people, again, in the lower income brackets, paying very little, paying 10 to 15%. Now they're going to pay ordinary. So again, the lower income won't be affected as much. Higher income going to go from 15% to their ordinary income rate, which could very likely be at least 35 to 36, 37%. 39.6 is what there initially was predicted. So from 15 up to 39.6. That's like a 164% increase. That's a lot of money going out for one change in the tax code. Okay, here's one that I think affects just about every single person that itemizes. That's right. Now, last year, we actually had a separate one on the 1040. Everyone knows if you brought a new car, you were able to deduct a sales tax. That's for the new cars that were purchased after February 15th or 16th in 2009. Well, that's gone. Now, in 2010, you still had, or 2009, you still also had the sales tax deduction. That's gone also. And why is that a big important thing? Well, sales tax is one of the things that a lot of people use to be able to itemize. And itemization gives you usually a larger tax deduction. And without the sales tax deduction, many people may end up being standard deductions, meaning they're not going to get as much that they were getting in the past that they're going to get now. Then we have the child credit. Now, you can't tell me, guys, that this isn't going to affect just about every single household. I mean, think about it. The child credit in 2010 is what? $1,000, right? 2010, we get $1,000. 1 year later, we get $500. That's a 50% reduction. That is going to have a major effect on individuals with children. I don't care who or what you are, how much money, that is going to be a big effect on you. All right, now we've got something here that a lot of people are going to say, wow, the phase out. Return of the phase out rules for the personal exemption. If you're making $150,000 or $75,000, married, filing separately, or single, which isn't exactly what I would consider really, really rich, those people actually start losing 3% in, I think, 2007, and went to 2 and went to 1 last year. And now this year, the good news is the phase out is 0. There is no penalties for making money this year and making it and getting your exemption, your personal exemption, which is like $36.50 or thereabouts. And you're going to be able to take that deduction off at 0. 2011, though, it's supposed to go back, and that means it's probably going to be at least a 3% reduction of your taxes. Now, that's a lot of money, guys. 3% you're going to lose on the $3,600 just because, just because you made a little money. I thought, wealth was a good thing. Okay, then we got the marriage penalty. So here, in a country where we all believe marriage is the #1 thing you should do, right? Most of us are taught it's a sin otherwise to do certain things, but this in our government says, hey, wait a second. If you're 2 single people living together and filing your own tax returns, you actually get a better tax rate than a married couple doing the same thing. Now, is that fair? Is there anywhere in the tax code that says, hey, it's better to divorce your wife and to both make money and live in sin than it is to file your taxes as a married couple because you get penalized? It's almost a $1,400 penalty is what they had accumulated in the past on this deduction. It is going to be back in effect, guys. And the last one, again, another one of those returns the phase-out rules. Good news. This is the time, guys. Time is running out. I can't be any more specific, but 2010 is an awesome year. If in the past you've lost personal exemptions or personal itemized deductions because of your income. Again, these start at $150,000 for a married couple. They don't start at $250, $150. And in 2010, both of these are what? Zero. That's right, zero. We need to take advantage of all the zeros we can get. Capital gains rates, zero right now. 2011, not so. Of course, like I said, sales tax is gone. Zero on the personal exemption, zero on the itemization, zero on the marriage penalty. All of those come in effect in 2011. It's going to affect you and me. Remember, if you've got questions, you can always email me your questions, friday@drfriday.com. Check out my website, www.drfriday.com. And as we always love to say at the end of my shows, cop you later.